It's Matt Bennett with a grain marketing update here on the 21st, October 21st. So we're going to talk a little bit today about a couple different things. I mean, clearly this market seemed to find a little life here over the last week. Obviously, weekly gains for both corn and beans right in the middle of harvest isn't something that we always see. I've seen and heard of a lot of different basis situations for several of you. For instance, in my part of the world, we've actually seen basis narrow up. Bids have gotten better. Why? Because we're running out of harvest, and they're trying to latch on to some of these last bushels. Whereas, a buddy of mine out in Nebraska said that their bean basis widened out another 10 cents, and they felt like it would widen out even more. Some of you in areas where there's good crops, they're running out of space. And so if you're running out of space, clearly, you're going to run into a situation where basis is going to be fairly rough. And so, if you do have bushels that still have to be delivered, I'd certainly keep that in the back of your mind. It's going to be tough to expect a decent basis. I'm sure you're going to have some issues, of course, like we've seen already with what it costs to store those bushels. And so I've had a lot of you reach out and say, hey, how can I stay in this thing, and still participate if the market goes up without, getting skinned alive. And so, we talked to a lot of growers about that. But one thing I want to kind of dive into today, and we'll see if we can't make this work, is I want to be able to essentially look at, my app, as far, a lot of you have already seen it. Okay. But I want to get to where we can look at it, and let me make sure we can get to the right spot. Hold on a second. I've got to get there. It's always problematic trying to figure this out. But essentially, I want to get to where I can show you, as far as the app's concerned, what we can do looking at 26, because quite frankly, whenever you look at 26, it's a tough deal. I mean, that's all there is to it. I mean, we know fertilizer prices are sky high. We know that we're in a spot where, let me see if you guys can see this. So hopefully you'll be able to see it. If someone cannot see it, feel free to shoot me a text. But if I look at this particular farm, you've got a 1,500 acre farm is what it is. Okay. I want to go back and show you. I know some of you guys are already using this. I want to go back and show you, go back to manage crops. And so, what I've got here is I've got corn for 26, 1,500 acres. I selected my cash bid based upon, my zip code. So there's my zip code, a 25-mile radius. If I want to go through here, I can select, what I selected was ADM. This time I'll just select for October 25, I'll select Finley. And it's a premium location. I've got an APH of 230, and it's basically, you can do this on a per farm basis, whole farm basis, per field, whatever you want to do. But I've got an APH of 230. That's a general figure that basically spans most of my acres on average. And then a yield goal of 240. Now, cost per acre at 200, or cost per acre of 1,000, it's probably a little low depending on what position you're in. Now, if you want to, you can go in and you can itemize every single thing here. But essentially, if you're in this spot, as you can see, your initial break even, assuming that yield, assuming a yield of 240, because I'm assuming a little bit better than APH. And clearly on a year like this, whenever we had the situation that we had of 10 weeks in a row of dry weather, and then we still raised APH type corn. I mean, it wasn't a record by any means, but we had pretty darn good corn. I feel pretty confident in at least making that assumption, especially knowing that I'm buying fertilizer or buying crop insurance. I know I'm going to have insured bushels, and so what that does is it puts my initial break even right now at 417 per bushel. Okay. Net profit per acre, negative 42. Now I've seen some different spreadsheets co-ops have put out. I saw one from Iowa last week, they showed that the corn on corn net loss per acre, if you fertilized at a normal fertility level, was going to be around a $200 loss, whereas corn on beans was going to be like a $110 loss, and beans after corn was going to be a $90 loss. Okay, now if that's the case, I mean, clearly you're going to see maybe a little bit of a trend of people backing off of some corn on corn acres where cash is tight. I'm not saying everyone's going to do it, but it's part of the reason why I've said all along that we might be in a position to where these acres could lower dramatically. We had 98 million acres of corn this year, 80 million acres of soybeans. And so 178 million combined. Could that combined number go up? Obviously, some of you have talked to me about milo. You're concerned about planting milo. I believe wheat acres are going to be steady. Wheat hasn't been a beauty queen by any stretch of the imagination, but at the same time, I think that your normal wheat acres are probably going to stay wheat acres. So if I'm in this position and I say, okay, good Lord, I've got net profit per acre that's in the negative, what could I do, to lock in some sort of a break-even situation or worst case scenario situation? And so if I come in here and I look at creating a scenario, okay, and so I've talked to some of you about this. If I'm going to do, like, for instance, I've got 360,000. I don't want to get super carried away here. So let's say we want to test this on 100,000 bushels. Okay, so we're going to test 100,000 bushels. Got expected basis of 2,100. That's pulled in from my cash bids that are already embedded into this based upon my location. Interest costs, I'm going to put 5%. I know that there's some higher interest costs out there. I'm going to put 5% in there. And so my test quantity is around 20 contracts. Now, you could just go in there and hedge futures, but you're hedging at a loss. All you're doing is you're saying, I think basis is going to get better. Would I want to do something like that? Personally, I'm not too excited. If I'm going to look at maybe buying a put option, all right, so I'm buying a put and I'm going to buy it up here. Let's call it, like a 470 type put. That's above the market, by all means. I mean, that's about a dime above the market. Strike price, I'm sorry, I put that in the wrong spot, 470. And the cost of something like that right now, I believe, is around 20, let's call it 30 cents a bushel, just to be safe. Okay, so it's around 30 cents a bushel. If I'm buying that put standalone, maybe I want to do something to cheapen that up. So I'm going to sell a call up here, and I'm going to give up a little bit of the upside on these particular bushels. 5 1/4 entry price. They're probably going to give me around 10 cents a bushel for that. And then I'm going to sell a put below the market. It's a three-way strategy. We try to employ these pretty consistently. They're probably going to give me around, I'm going to call it 13 cents for that. Okay, so in this particular situation, I'm going to come down here and I'm going to put in some test ranges. What if the market goes to, for instance, 350? What if we end up at 4, 450, 5, 550, and 6? I mean, this is all stuff you guys can do on your own. For your farm, everything is completely individualized. As you can see here, if the market goes down, we're in trouble. Why? Why is it? I mean, we've already put some risk management in. Well, part of the reason is because we flat out don't have any sort of protection on the rest of the bushels. Now, we can certainly throw a strategy in here to show, what it looks like with, whenever it comes to, and I just got a message that my screen is not showing. I'm trying to work with you here, but regardless, I wish you could see the screen, but we are going to have to get this straightened out. But anybody that wants to use this app, we will give you a demo, a live demo, our screen to yours, and I can show you exactly how it works for your particular farm. I'm looking at my screen right now. I guess you can't see me. I'm going to go off of sharing, but what I'm going to do is I'm going to continue looking at my particular screen, and I'm just going to tell you what we're looking at. if you didn't do any sort of risk management whatsoever, okay, and let's just say that you didn't do any sort of put option, you'd be in a position to where if the market went to $4, you're going to be looking at a loss of around 500,000 bushels. Okay, if you go and you buy that put option, like I said, on 100,000 bushels, and you sell a call and you sell a put, now you've put yourself in a position to where actually, if the market goes down at $4, you're not losing near the amount of money. I mean, I'm talking several 100,000. So, what we're trying to do here is put you in a position to where I talk about worst case scenarios all the time. I've had a couple of you reach out and say, it seems like you say locking in a worst case scenario all the time. Well, in this particular position that we're in, we know that right now, corn, beans, wheat, cotton, I don't care what it is, Milo, there's not anything that really feels good as far as the profitability situation goes. Okay, it's tough to find black ink, but what do I want to do? I want to put myself in a spot that if the market goes down, I'm not going to have an even worse situation than what I already have. If the market goes up, I'm going to participate in an up market, at least to a point. Why would I put on a strategy that caps myself out at 5 1/4? Well, if I'm doing it, on maybe 20% of my bushels, 25% of my bushels, whatever it might be. If I'm doing it on a small amount of bushels, then clearly the rest of my bushels I'm participating if the market skyrockets for some reason. Now, I'm not in a position right now, I'm not recommending to get aggressive. In fact, I don't really want to do anything until we see, for instance, December 26 corn get back above last spring's insurance price of 470. I'd like to see something up there around 475, 480. And I feel like there's a pretty decent chance we'll see something like that happen, just simply due to the fact that we have massive demand here. I mean, that's all there is to it. You've got record world demand, record U.S. demand for corn. We know that the U.S. grower is a little bit gun shy on planting a heck of a lot of corn here. It's tough to be in a position where you've got a grower that's in a cash crunch, and you're asking them, hey, if you're going to put on your normal fertilizer, you're going to, it's going to cost you $100 an acre more for NP and K than what it did a year ago. That doesn't work. I mean, that's all there is to it. It just does not work. And so what are a lot of us doing? What am I doing? I just met with my fertilizer guy about half an hour ago, and I'm putting on less phosphate this year per acre than I've put on in many, many years. And why? My fertility is in really good shape, first of all. Second of all, I think phosphate's way too high. And third of all, whenever I start plugging in an itemized cost structure into the app, the Ag Market app, it shows me that it just simply doesn't work to spend the kind of money on fertilizer that I have been, at least if I was applying the same level. If I was applying the same levels, which here in Central Illinois is pretty common to have it like a 250 and 250, sometimes even a 250 and 300. We've seen something like that, whether it's MAP, DAP, and potash. That's expensive this year. It doesn't work. And so, I think that we've got to be running our numbers before we make any big decisions here. I know a lot of folks are trying to go into a program. I know that I'm going to use a program this year that's it's biological, and it's supposed basically to increase microorganism activity. And quite frankly, they say that it's supposed to help you with uptake of P and K. That's something that I'm doing in tandem, with backing off on some of the fertilizer that I'm putting on. So bottom line is, I think we've got to make adjustments, and the adjustments have to be made after we run the math on our individual farms. We got to know exactly what we're dealing with here and make the necessary adjustments. Now, I know that some folks have reached out and said, hey, I'm trying to work with, for instance, a landlord. In my opinion on this is that you should have a program like what I'm talking, maybe even an Excel spreadsheet, and show them, if I put on the fertility that I think needs to be put on to keep this farm intact, this is what I'm looking at for math. That way they at least know it. I'm not saying that your landlords are going to say, oh, okay, I'm going to go ahead and drop your rent. But at least you might be in a position where they understand the situation, and maybe you could get a little relief. Maybe you could get into a little bit lower rent on a variable rate. Certainly those are things that I've done a lot in the past. If that's something you're interested in, reach out. I'll give you an example of things that we've done, things that some of the banks or, for instance, Farm Dog team have put out. But there's certainly ways that we can at least put ourselves in a position where those that are working in and around our operation understand what we're dealing with. So anybody who wants to learn more about this app, by all means, please reach out. If you want me to address any particular topics, let me know. As of right now, I'm looking for, I know we spent most of our time talking about corn. Hey, if this bean market pushes up on 26, closer to $11, I think we've got to be locking in once again some worst case scenarios to where we can put ourselves in a position that if the market goes up above whatever 1240, 1260, whatever it is, we don't necessarily participate on those bushels. But we've got a floor locked in $11, because if we do plant 85, 86, 87 million acres of soybeans this next year, it may be a tough row to hoe to get this market to do what we want to see it do. So again, thanks for listening in. If you want to ask me questions, by all means, all my information is with the newsletter at the bottom. You can reach out to me. You can comment on the video if you want to. Whatever it is you want to do, get a hold of me, and I'll try to address it whenever I get the opportunity. So thanks for tuning in again today.